All right, let's talk about SoFi. As of this recording, the stock is over $14 a share and climbing. Lots are going on behind the scenes, and yet there's many who are still betting against this company. And if you'll remember, I did a video recently saying that this company is going to $20 by the end of the year. That was my prediction. And in this video, I'm going to be sharing what I'm seeing for SoFi behind the scenes and what I think comes next. Okay, so I just thought I'd hop on and share some thoughts on both news related to the underlying company as well as related to the stock and the movements that we're seeing. And the reason why I'm doing this now is because SoFi is currently at $14 a share. It's not only forming a strong base in the low teens, but it's also breaking past that base in a very quick time period. SoFi is essentially bucking that trend it's had over the past several years of pumping and then dumping immediately, where you couldn't really hold any gains because it would sell off the minute that it ran and more people piled in on the short side towards the sell off. And that really became a self fulfilling prophecy where many were betting that this company would fail in an aggressive fashion. And after that happened several times in a row, it really becomes a trend that the stock can't break past. And that's how we got into this like 3 year downtrend, which we just recently broke through. And now that we have, it's been straight up for the past couple of weeks. And the reason we broke past it ultimately was backed by terrific fundamentals, which we've been talking on this channel for quite a while, to the point where the company has not only formed a solid base, but it's also preparing to climb much higher. And the number that I landed on for the end of the year was $20. Funny enough, that was also my price target at the beginning of the year, was $20 by the end of the year. And it seems like finally it's starting to wake up and get closer to that number. And so this video, I really want to keep it relatively short and focus on a couple of key aspects that I think is going to drive that momentum up higher. The first of these aspects is short interest. Last week, we got updated short interest numbers for SoFi. The short interest for October 31st still has 162 million shares sold short from SoFi, down slightly from 180 million that it was on October 15th. Not down as much as I thought, honestly, but this does mean that there has been covering over the past 2 weeks. But remember that October 31st, SoFi was still trading in the $11 range, and we've seen big spikes since then. I mean, we're above 14 right now. So keep in mind that this data is still delayed by 2 weeks, and we're going to see where this ends up, whether this keeps going down even further or whether shorts are going to pile in stronger. But I think relative to the move that the underlying stock has made, for us to only see a 3% decline in short interest, I don't think that's enough, quite honestly, because right now we're at a point where it's moving several dollars on any given week. The volatility seems to have increased over the past little while, and we're seeing a bigger discrepancy now with the reporting of the short numbers because there is a 2 week delay in terms of when we get those numbers. And so if the short interest numbers come out for November 15th and they show 13% short interest as opposed to 15, I wouldn't be surprised, right? Because over that same 2 week period, the stock has moved like $3 or $4 in the underlying. And even if we take the flip side, right, by contrast, if we see 15 or 16 or even higher percentage of short interest over the next 2 weeks, I would be very surprised, first of all, but I would also be very excited because we know that everybody who's held a SoFi short at this point is underwater. And we know that they won't have a choice but to cover if the stock continues to move in such an aggressive fashion. And so my point is, now that the volatility has increased and now that the stock is making more aggressive moves, we theoretically should see a bigger discrepancy in terms of the short interest fluctuating. But if we see it staying the same or even moving higher, that's going to be bullish because people are essentially betting that this is going to dump. And if it doesn't, then you're going to have a big move upwards. So that's the first piece, is the short interest telling a story around the stock and around the sentiment with regards to that stock. The second piece that I found interesting was this new interview between Anthony Notto on Cramer over the past week. And I think it's important for the narrative because in that interview, Notto reiterated the non-lending side of the business by highlighting upfront, point blank, that they are not a lender because half of their revenue doesn't come from lending. And they also talked about the loan platform business, which, if you've been following these videos, is very, very bullish for SoFi because of the positive contribution that this can have to profitability and how the loan platform business expands the pool of people that they can make money off of. Here's a clip of Anthony Notto from that interview with Jim Cramer talking about the loan platform business and how they're making money off of it.
So talking about the Fortress deal, I think they're very exacting. They don't get involved unless they think that they're going to get their money back. They are probably the shrewdest, I think, of the big private equity companies.
This concept of a loan platform business where we get paid fees for originating loans for other people that want to buy those loans, it really started as an idea back in 2019. At first, when we declined a loan applicant, we would send them to another partner that would underwrite that loan and we get paid a fee. We've evolved that over time where now when someone applies at SoFi, we can either approve the loan on behalf of somebody else using their credit model, or we could approve the loan and get paid a fee for that loan by our third party. It allows us to monetize things we wouldn't otherwise monetize.
And they also talked about student loans and a couple of other aspects. But an important point, they also touched on this robo-advisor partnership with BlackRock, which was also just launched last week. And I think this piece is also interesting here because it expands the pool of offerings that these types of individuals, who are the core target demographic for SoFi, are in search of. And with regards to that, Anthony Notto was talking about alternative investments, and he was talking about investments that generally the average person wouldn't have access to. It would only be this very small pool of accredited investors. And now they're expanding that out. And so I'll play a clip and you can hear Anthony Notto talking about it himself.
So let's talk about the BlackRock deal. What will this platform mean for you with BlackRock?
This is an important component to our overall mission. We want to help people get their money right, and we want to be a one-stop shop to do that. Within Invest, we also want to be a one-stop shop, but we want to give our members, our investors, access to asset classes they would not otherwise normally get. Asset classes like IPOs or alternative investments that are typically reserved for high net wealth individual. We're giving the Main Street investor access to IPOs, to alternative assets, which we launched at the beginning of the year. And this week we launched robos with alternative assets. We originally had 3 robo accounts that really primarily invested in equities, fixed income, and money market funds. And now we've introduced robo accounts with those assets plus alternative assets with our partners and BlackRock.
And Jim Cramer sort of looked at his notes and he said, well, how are you guys getting all these members? Like, this is crazy growth that you're seeing. And I found that interesting because on Friday, we saw a report of the largest US banks by assets, where SoFi moved up 2 slots to the 67th largest bank in the US with 29 billion in assets, up 2 spots from the previous report of June 30th. Now, this report is also delayed. This is as of September 30th, and this report only comes out quarterly. But the theme here, I think, is very clear, especially if you've been following along with these videos and with SoFi's growth story in general. More members equals more assets under management, equals more product innovation to service that user base, which then ultimately equals more awareness of their total pool of products. And that awareness leads to even more members. And management is very aware of this growth flywheel. They're actively leaning into it with their growth initiatives, and also with the fact that they're moving into non-lending. Like, that has lower barriers to entry for people. And so it makes sense for management to lead with non-lending and then eventually get them into the lending segment. And on the management front, we're going to be hearing more details very shortly because Chris Lapointe is going to be on a fireside conference on December 3rd talking about SoFi. And so far, every single fireside that we've ever had Chris Lapointe or Anthony Notto on has led to some golden nuggets of information behind the scenes of new product development, of existing product growth overall. This is where we heard about Cash Coach and others. This is also where we heard last year Chris Lapointe, the same fireside, where he said a top 5 US bank was what Galileo was in the RFP process for. And so there's nuggets here of information if you're listening closely. I'll probably be live streaming that event on this channel, so make sure you tune in for that. Now, the third point as to why this rally can continue and even accelerate for SoFi is because institutions are finally waking up and realizing that they want to be owning a part of this company over the long term, because we've now had 4 consecutive quarters of GAAP profitability, and in many of the bear cases have been destroyed completely. And many people, institutions and retail alike, are realizing that if you overlay the growth rates with where this company is trading at, you'll realize that this is actually an undervalued company, and that institutional ownership is the sign of that. Institutional ownership in SoFi has increased and continues to increase every single month. It actually spiked this month. And if you just look at the numbers here, you can see 534 million institutional shares held. And looking at the shares outstanding, 1.09 billion, you can come to a number around 50% of total shares being held by institutions. And that's still fairly small when you compare it to larger companies. I mean, of course, like the FANGs are like 95% institutionally held, but even other companies that are high growth companies are 60, 70, 80% held by institutions. So for SoFi specifically, it's largely been held as a retail company, which means that there is more room for growth from an institutional accumulation perspective. And that's positive because more institutional purchases is going to drive up the share price even higher. And yes, I understand it's not that simplistic over the short term, of course, because there's all these other layers to consider with regards to options and others. But if you zoom out and if you look thematically at the direction that this is going up and to the right, over a longer time frame, you're going to have these positive catalysts that are forming because institutions are becoming more bullish on SoFi as a whole. Why is that the case? Well, you remember the flywheel that we talked about a few videos ago, right? Institutions and analyst upgrades and retail sentiment and short interest, they all work together to change the narrative and ultimately re-rate a stock like SoFi in the market. And you're seeing that all play out now in real time. You're seeing that in addition to short interest falling, institutional ownership is rising. We're seeing analysts now upgrading the stock also as a result. Just earlier this morning, Mizuho analyst Dan Dolev, I think one of the most bullish analysts on SoFi, increased his price target to $16 a share from $14 a share. And I think at this rate, Dan is going to have to increase it yet again before the end of the year, because as the stock price goes higher, if he's still bullish and we hit $16 a share, then all of a sudden he's not going to seem as bullish with that price target. And so he's going to be forced to raise it higher. He was at 14, we crossed 14, he went to 16. If we cross 16, he's probably going to go to 18 and so on and so forth, because the stock hits their price targets. And yes, we do know that sentiment follows price, but so do analyst price targets. And so if you just put all these pieces together, right, the short interest, the institutional accumulation, the management narrative changing and how management is talking about their business, and also the analysts upgrading the stock, all of the puzzle pieces are fitting together perfectly. And it's exactly what I was saying a couple of months ago, now playing out in real time, exactly as I was highlighting it. And I've seen this play out over my last 7 years of investing. I've seen it play out several times in different names. And almost always the result is very positive outcomes. And I said this was going to be a quick video and I'm just rambling, but the last thing I'll say right now is SoFi is about $15 billion in market cap. And we know that the S&P has market cap restrictions. I think it's $18 billion. So that's definitely going to become more of a discussion topic as the stock continues to climb, but more importantly, as the stock continues to hold higher levels. So it's not just climbing to $16 and just breaking a new 52-week high. It's holding that level, accumulating, forming a base, and then using that base as a next leg higher. Of course, the next several months, we're also going to get an idea of what their 2025 growth plan looks like. I think Chris Lapointe is going to share some of that in the fireside on December, but at the end of January, when they report the last quarter earnings, they're going to be sharing their full year 2025 guidance as well. And that really makes me think of the guidance that they issued at the beginning of this year, more importantly, the 2026 guidance that they talked about. Because if you revisit that same statement that they talked about at the beginning of 2024 for 2026, they assumed no additional new products, and we have gotten several new products that will, over the course of the next 2 years, increase that EPS significantly. I mean, the loan platform business alone is going to increase EPS in a big way. And so really the guidance from an EPS perspective is going to be revised upwards and upwards and upwards because of management's new innovations from a product perspective. And so there's really positive catalysts that are going on over this week and over the next several weeks, but mostly I'm just enjoying the ride upwards. I think much of it is supported by the macro. And if we have good bullish macro, then SoFi is going to ride up that wave. And we'll see where the stock ends up. But right now, there's nothing that I'm really doing differently with my portfolio. I'm still holding a massive position in SoFi. It's, I think, the largest position right now, or the second largest in my portfolio. If you enjoyed this video, please share it with someone who is thinking of entering SoFi stock. I'm seeing people on X just buying SoFi for the first time ever. And it's really amazing for me to see people who are jumping in at $14 because they've never heard of this company and they think it's a steal of a deal at 14. That's great, because that's a whole new base of investors that we are forming. And so I think that's going to continue, and in a big way. We'll see if we hit $20 by the end of the year, but I'm still rooting for it. Thanks so much for watching, and I'll see you in the next one.